Back with Carl Icahn right now, it does show how much attention we pay to all of these Federal Reserve guys, and we're in the middle of what you have claimed, Carl, has been this unwinding of keeping interest rates obscenely low for close to a decade. You had said in an interview not long ago, if you keep them abnormally low, referring to rates, you are only going to pay a big price for that by definition. You can't just keep printing up money and giving it to people. You just can't in a society. So sooner or later, they have to come home to roost. Are we at that phase right now?
Yeah, look, I don't know if it's right now, but in my own portfolios, what I've always done is keep them hedged. So I'm not really playing the market. Sometimes more hedged, sometimes less hedged. The last year and a half, I've been completely hedged.
So that means what? You're buffering yourself for just in case scenarios.
Yeah, it doesn't really matter too much to me what the market does, you know?
Okay.
In other words, for example, I thought this environment at Diamondback, the oil company, I just, as an activist, wanted them to do a deal with Diamondback or what have you.
Right.
But what I did throughout that is sell the XOP, the index, against it, so it didn't matter to me what oil prices did. So obviously everything with that. That's what I do, and now I've done it. I'm at a high percent or almost 100% hedged. But I don't know what the market's going to do. Nobody does.
No, that I understand. But there are a lot of people who are noticing all these multi-100 point, 1,000-point swings and saying, well, something's going on here that's not typical. What do you think?
Yeah, no, I agree. And sooner or later, there's going to be a day. There's going to be a day, and I'm 98% sure of this, where we do hit a wall. Because the Federal Reserve is not a rich father that just keeps giving his son money and keeps giving his son Playboy son money, say. You can't keep doing that because you have a world economy, and the father runs out of money. And you can't, and what you just said about the Fed, it's not just the interest rates, but they sooner or later have to unwind their balance sheet.
That's right.
And with that balance sheet is trillions, and or at least not keep pouring the money in. And then you look at that, and then you look at the debt in this country. 85, 90% of this country really doesn't have a net worth. I mean, they keep talking about consumer wealth, but I don't think they have it. So they're borrowed to the hilt, and sooner or later, they got to stop borrowing. They got to pay it back. So sooner or later, if we don't do something pretty drastic, we're going to hit a wall. We sort of hit a wall with this 20% move. But one time, there's going to be more of that wall hit, I think. It may not be now.
Is that debt issue as bad as it was a decade ago?
The debt issue is worse, I think. I mean, look, I've been telling you that $250 trillion of debt in this world. And a decade ago, I think it was, I'm not an economist, but I think it was, but I would like to read this shit. It was 110 trillion. You're up to $250 trillion. That tells you something.
But are as many as vulnerable? You always hear that corporate balance sheets are better, personal Americans' balance sheets are better. You're not buying that.
No, I don't think every corporate balance sheet is better. Look, the corporations have made another mistake to some extent. Now, I've been for, as an activist, buybacks in certain cases, like Apple.
Right.
Because Apple had so much money, we said buy back. But we don't say that about every company. And a lot of these companies, instead of using their money to build productivity, went out and just bought stock back, in some cases at the wrong time, many cases at the wrong time. So I don't know that corporate debt is pretty high, and it's coming due. And it is coming due. So you don't have the false impression that, oh, these guys have so much money now. I don't think many of them do. And I personally, looking at some of the economy, you could argue it either way. But that doesn't mean that this market can't run back 15% back up. I really spend more time thinking about what companies to look at and where to be an activist, much more time than deciding what the market's going to do, because the pundits that tell you what the markets are going to do, I think that and 25 cents or whatever it is gets you a Coca-Cola or something,
Well, aren't they all on? I think they're all on CNBC, Carl. But anyway,
yeah, I guess you'd say that.